Hello and welcome. Today we shall be looking at Unilever PLC. The company has a market capital of £48.2 billion and is currently ranked 9th in the UK FTSE 100 index. In 2017, Unilever had a turnover of £48.3 billion and a profit before tax of £7.3 billion, giving it a margin of 15.2%. It currently pays an annual dividend yield of 3.1%, which is paid quarterly. This dividend is covered 1.5 times by the earnings per share. Founded in 1929 by the merger of Dutch margarine producer Margarine Unie and the British soap maker Lever Brothers, the company has dual listing in the UK and the Netherlands. The current CEO, Alan Jope, joined Unilever as a graduate trainee in 1985. From 2014 was President of Beauty and Personal Care and was appointed CEO at the beginning of January 2019. The previous CEO, Paul Polman, was appointed October 2008 but resigned in December 2018. Unilever employs around 169,000 people worldwide and has around 400 brands in more than 190 countries. Its products are used by 2.5 billion people every day. It is divided into 4 divisions. Personal care was 38.5% of the 2017 annual revenue. The products include Dove, Dollar Shave Club, Lux, Sunsilk, Tresemme, Signal and Vaseline. The second division, Foods, accounted for 23.3% of 2017 annual revenue. Products include Knorr and Hellmann's. Unilever sold its spreads business, which included Flora and I Can't Believe It's Not Butter, in 2017. The third division, Home Care, accounted for 19.7% of 2017 annual revenue. The products include Persil, Surf, Comfort, Domestos and Sunlight. The fourth division, Refreshments, represented 18.5% of 2017 annual revenue. These products include Wall's Ice Cream, Magnum, Lipton, Book Bond and Ben & Jerry's. Unilever has had a consistent revenue for the previous 5 years of between £43.5 billion and £48.3 billion, with a profit margin ranging from 13.5% to 15.8% and an average of 14.6%. The forecast for the next 2 years is £41 billion revenue with a profit margin of 17%. With generated earnings for the previous 5 years of between 145.8 pence and 201.6 pence per share, the dividend has always been well covered by at least 1.4 times the earnings per share. The Unilever share price is stable with a volatility 43% lower than the overall FTSE 100. Unilever share price standard deviation for 2018 was 170 compared to 348 for the FTSE 100. The current share price is currently 52.5% higher than the 52-week low. In early September, Unilever announced the proposal to simplify the parent company structure from 2 legal entities, NV and PLC, into a single holding company incorporated in the Netherlands. The UK head office would close and the company would not be listed in the FTSE 100, but still listed in the UK. As Unilever is a main constituent of FTSE 100 tracker funds, there were strong objections from shareholders. In November, Unilever decided to withdraw its proposal and CEO Paul Polman decided to retire from the company. Alan Jope was appointed to the position with effect from the 1st of January 2019. In early December, Unilever announced it was to acquire health food drinks portfolio of GlaxoSmithKline in India, Bangladesh and 20 other prominent Asian markets. At the end of 2017, in a bid to concentrate on faster growing products, Unilever sold its margarine and spreads business to US private equity firm KKR for $6 billion. The spreads business was put up for sale in April 2017 after fighting off an unwanted £115 billion takeover bid from US giant Kraft Heinz. The purchase of the Indian GSK health food drink fits in well with Unilever, as there are many synergies with their existing products. Horlicks is very popular in India, representing around 90% of the 2018 £500 million sales. Unilever is considered a defensive stock with a higher than average price-earning ratio of 20.5 compared to the FTSE 100 average of 11.4, and a dividend yield of 3.1% compared to the FTSE 100 average of 4.48%. The dividend is covered 1.5 times by earnings. For these reasons, I have given Unilever an overall rating of 4.7 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.